Vivekam, a product-driven advisory firm,
helping me delight customers with ease. Services like Snapshot gives me updated stock portfolio views, and Spot helps me identify undervalued stocks. Similarly, with Portfolio Scanner, I am able to scan and spot weaknesses in the portfolios, helping clients maximize their results and beat the market.
Call our trusted advisors today.
So welcome to Vivekam Financial Services presents Wealth Talk.
యువతకు పెట్టుబడులపై ఉన్న సందేహాలను నివృత్తి చేసేందుకు వివేకం ఫైనాన్షియల్ సర్వీసెస్ ఆధ్వర్యంలో వెల్త్ టాక్ కార్యక్రమం జరిగింది. మార్చి 9న రాడిసన్ హోటల్లో జరిగిన ఈ సదస్సుకు విశేష స్పందన లభించింది. టీవీ5, వివేకం ఫైనాన్షియల్ సర్వీసెస్, ఐసిఐసిఐ ప్రుడెన్షియల్ మ్యూచువల్ ఫండ్స్, ఎస్బీఐ మ్యూచువల్ ఫండ్స్, ట్రేడ్వెల్ సెక్యూరిటీస్ ఈ కార్యక్రమాన్ని సంయుక్తంగా నిర్వహించాయి. ఐసిఐసిఐ ప్రుడెన్షియల్ ఎంఎఫ్ తరపున ఆ సంస్థ ప్రతినిధి రవిశేఖర్, ఎస్బీఐ మ్యూచువల్ ఫండ్ నుంచి ఆ సంస్థ రీజనల్ హెడ్ శశాంక్ పాల్, వివేకం ఫైనాన్షియల్ సర్వీసెస్ సిఎండి వివేక్ ప్రసాద్లు పెట్టుబడులపై అవగాహన కలిగించారు. అలాగే సదస్సుకు హాజరైన ఇన్వెస్టర్ల సందేహాలకు సమాధానాలిచ్చారు. ఈ వెల్త్ టాక్ కార్యక్రమం హైలైట్స్ ను ఈ వారం లెర్న్ టు ఎర్న్ ప్రోగ్రాంలో చూద్దాం.
So as you are aware, all of you are aware, there is no better instrument than equity to create wealth, and no other instrument can beat equities as an asset class. This is repeatedly told to us by the media, by all the financial planning experts like Mr. Prasad, and this is an exciting time for the equity markets. Recently we have seen the mutual fund industry is witnessing robust growth. The assets under management of different AMCs all put together now stands at about 18 lakh crores and growing day by day. It's the record amount, 18 lakh crores. In 2001 it was just 1 lakh crores. In the last 15 years it has multiplied by 18 times thanks to people like all of us. We are all contributing to the growth of the AMCs. We are all investing our surplus savings into equities. So that's a big trend, biggest trend that we have seen so far. With these few words, I now invite Mr. Ravi Shekhar, IFA and Knowledge Management Initiative of Division of ICICI Prudential. I welcome you. And I also invite Mr. Shashank Paul, Regional Head, AP and Telangana, SBI Mutual Fund. I invite Mr. Vivekam Prasad, promoter, Vivekam Financial Services. So I would invite Mr. Ravi Shekhar to address the gathering and share his ideas about wealth creation.
What I'm giving you as a mutual fund is a building block. When I say building block, everybody has a different requirement. There is somebody who has about 1 crore of money which he has got by selling something, and now he wants to invest so that, and he wants to get his retirement done, and he wants a regular money coming out of it. There is somebody who's that, let's say, age of 30, and he has about 10,000, 15,000, 20,000 he wants to put now and accumulate something, and after he reaches 60 years he wants to pull out something. There is somebody who's retired and he has got 40 lakhs and he wants to invest and he wants to make better return than FD. Mutual fund is somebody who gives solution to everything. And let me just explain, if you are not aware, 3 features in mutual funds. First and foremost, which each and everyone needs to start, is something called a systematic investment plan. SIP is a simple way, or is simple wealth creation tool. Number 1. Number 2, what you can do is that, let's say you do SIP for 25 years and you have accumulated 1 crore. After that, what do I do, Ravi? You have facility called systematic withdrawal plan. So you have 1 crore and you can tell and give an instruction that every month I need, let's say 10,000 rupees. So automatically the 10,000 rupees is withdrawn from 1 crore that, and it keeps coming from you. You have systematic withdrawal plan. There's something called a systematic transfer plan. There are business people who says, in a year I make money, in another year I don't make money. I don't have regular intervals. So what we do is that there's something called a systematic transfer plan. You put some lump sum money into liquid fund, which is safe, right? From there, you give systematic transfer plan into equity in a phased wise. If you know these three features, you can build whatever way you want in whatever product you want. So that's what I call it's a building block which you can build whatever house you want to build. Right? Use these three features, use these three things, which is liquid fund, debt fund and equity fund. Okay. Right? For the people who are not aware, if you have invested in mutual funds, after 1 year of your investments, whether you make 10%, 100%, 400%, 1000%, you don't even have to pay a single percent tax. First golden rule is that look at whether your investment is beating inflation and is it beating inflation after paying taxes. Mutual funds as such have variety of products which can give you better return, risk adjusted returns than the traditional investments what you have been investing. Use liquid fund for your surplus parking. Use debt funds here as an alternate for your bonds and fixed deposits. Use equity mutual funds for your alternate of longest wealth creation, which is whether the money which you are putting into real estate or gold or anywhere, it can become, because anytime you want to stop, you can stop. Anytime you want to withdraw, you can withdraw. Okay. Use systematic investment plan, use systematic transfer plans, use systematic withdrawal plans, different features to build your own portfolios. Okay. Remaining all is taken care by the portfolio managers. And one final step which probably you need to make is that get your advisor right. Okay. What you need to only look at is that get who you are dealing with, get the right thing, and don't just invest into only equity. It has been clinically proven, and for almost 60 years of research in America, that what basically decides whether you are making wealthy portfolio, whether you are wealthy or not, it is not about the best stock you have taken, it is not of the best mutual fund what you put. It is called asset allocation. Your asset allocation is that how much money you have put it in liquid, how much you have put it in debt, how much you have put it in your FD, PPF, real estate, equity, gold. Entire mixture of it is going to decide whether you are wealthy or not. So asset allocation is key. Mutual fund has alternative for every traditional investor. First, talk to your advisor and find out what is my best in. Every investment going for what you make, sir, 6 months ku pedam anukuntunnar, bank FD all in tista antunnar. Is there a better alternative in mutual fund? You will get that. With lock-in, what is expected, that get a right advisor. Solutions are in mutual funds in every area.
I request Mr. Vivekam Prasad, promoter, Vivekam Financial Services.
And when it comes to the mutual fund investments, like Ravi Shekhar gave a very long and very detailed presentation of what you should be doing. I am not really going to talk too much about debt market because fixed deposits, all of them are known to you. I am going to concentrate more on equity investments. What are your goals when you go to the mutual funds? The first thing you would say, I want to make money, right? Is that not the objective? First thing is you want to make money. And then if I ask you, you say, I want to invest in only good funds, sir. I wish I know the good funds, right? Better funds. And then to earn a decent return. Then you also want to be ahead of other people. And then to drop out funds if they are likely to underperform. And what I do from our side is, we did a scientific study, we did a kind of mathematical or statistical model, and we only wanted to prove that can we identify a good mutual fund schemes at any point of time. The difference here is, I will come to it a little later, returns from shortlisted funds to be more than nifty. That means if I tell you these are the 5 funds, or if you identify these 5 funds look good, because there are almost like 900 schemes now. If you identify 5 funds, these 5 funds should give you a better return than the most of the average. That means you should get return better than Nifty or index, Nifty or Sensex. And interface should be very easy to work with. That means it should be very simple. By click of a button, you should be able to get the better funds. And this should be available to you free of cost. What I will do is I will take the birthdays and then demonstrate to you on those days in any 1 or 2 or 3 or 4 years back, whenever you want, whatever year you choose, we will go and then pick up what were the best schemes on that day as per this process. Now I am asking the computer to show me what were the mutual fund schemes recommended on 16th of November 2015. Now if you see, index has gone up by 3.94%. Out of my 10 schemes, 3 funds have not done well. 3 funds have not done better than index. But when you take the entire 10 schemes average, that is 7.77 versus index return of only 3.94. That means still we are able to make more than 3% more than the index. All that I want you to understand here at this point of time is, if you follow a particular process, you have the ability to identify the better schemes that are going to do well. You remember, what I am talking now is what are going to do well. But what are we trying to do? We are trying to look into the future. How did I look into the future? Do I have a magic formula? Unfortunately, no. I will show you what the formula is. What I did was, right from 2000 to 2015, I took top 25 mutual fund schemes of every possible day and checked how many of them have beaten the index in the next 1 year. Unfortunately for all of us, only about 50% of them could beat the index. That means if you are lucky, you will pick the fund that is going to do well. All the funds have done well, better than index. But when you pick one of them, the likelihood of them beating the index in the next 1 year is only 50%. If I want to check what is the best mutual fund today, I don't take only 1 year period. I want to take 2 years data and then check the rolling period of every possible combination of 1 year period. Then what I did was, I don't want to check how much it really worked well, how much it really gave the return. Because every mutual fund, every website will give you, this fund has given 18%, this fund has given 27%. You normally get confused with that. But what you should look at is, in the meantime, if index has gone up by 30% and if this mutual fund has given 27%, you have to say this as a bad. You cannot call this mutual fund good. Normally people believe, sir, 27%, do you think it's bad? It is bad, provided index has given 30%. But whereas if index has given only 5% and this has given 7%, still this is better. So you need to compare in comparison with index. You cannot compare in isolation with index. That's the first step. So we checked the outperformance. So what you need is kind of a stability. So what you need is the returns has to be average maybe 10%, but normally it should not be between 1 and 20. It should be close to 10 so that you can expect some outperformance out of the index. That is what is volatility. Then what we do is, what is the expected outperformance from this scheme? I am still stressing this point. This is expected outperformance, not performance. Expected outperformance. Like this, I work on all the mutual fund schemes in the country, all the mutual funds. How do I work? Because I use computing. I like IT employees, I have 7 or 8 of them working in my office. I work on the data all the time. I compile the data and then come up with the ranks for all the mutual fund schemes, arrange them in descending order. The fund that is giving the highest outperformance will be my choice for my clients to pick up.
Every day is a new opportunity. That's the way of life. Markets are full of surprises. Monetize your winning moves. Ethics, values, strategic investments separate the winners from the losers.
Check. When it comes to chess, I play to win. When it comes to investments, TradeWell helps me win.
Vivekam, a product-driven advisory firm, provides services through features like Snapshot, Spot, Portfolio Scanner, helping clients maximize their results and beat the market. Call our trusted advisors today.
Mr. Shashank Pal has got a rich experience of 2.5 decades in the mutual fund industry. He is with the State Bank of India SBI Mutual Fund for the past 11 years, and before that he was with various other AMCs. So let's all listen to Mr. Shashank Pal and his wealth creation ideas.
As Prashad Guru mentioned, that you must diversify your portfolio. How do you know how do you diversify? Now the thumb rule generally is that 100 minus your age. That's a very crude way of putting it. It doesn't hold good, but if you don't know where to start, there's a very crude way of starting and crude way of putting it. That if you're 50-year-old, then you should put 50% in equity and 50% in non-equity or debt. If you're 40 years old, 60% should be in equity, 40% should be in debt. That's just for starting, just for the heck of beginning, making a beginning. Going forward, based on your risk, appetite and return expectation and life goals, you do it. Earning, saving, investing and insurance. They are all 4 different things. The moment you mix it up, you are making suboptimal utility of each of them. Those of you who understand a little bit of accounts would know that insurance is always treated as an expense in the books, in the balance sheet. It is never under the head investments. And once you set aside that 5 rupees or 3 rupees towards insurance, remaining 97 rupees, you invest. The Sensex, as he mentioned, Ravi mentioned, from 79 to at 29,000, the CAGR is more than 17.5% per annum return of Sensex, which is not actively managed, which is a passive index. That itself has been able to generate a return of 17.5%. And we are talking about actively managed funds in mutual fund schemes, and still we are taking a example of 15%. So that is pretty conservative and pretty realistic. Do not invest with your eyes closed, with a lot of misconception about assurance or guarantee of returns. Secondly, risk is very, very confusing and misleading and misunderstood terminology. Fund managers or asset managers' profession or job is to mitigate risk. So please leave it to them to manage the risk. You decide about what you want. If you want to be greedy, be prepared to face consequences of being greedy. Because we have products for all categories of investors. So it's a 4,000 schemes are there. It's not your cup of tea. So you decide about what is your goal, how much money you can set aside, when you want how much, and what is the return expectation. Based on that, the financial advisor will guide you through. And investment is not about, 6 महीने के लिए invest किया, 1 साल के लिए invest किया. If you want to create wealth, the way you invest in your child, 10 year, 15 year, 20 year, you don't expect him to be a doctor the moment he is born, or after 7 years, say, अरे 7 साल हो गया अभी तक doctor नहीं बना. You are there. You are nurturing him. Investments have to be treated like that if you want to create wealth. Thank you so very much.
D. Uday says, how to get daily tips from Vivekam.
టిప్స్ అనేది నార్మల్గా మెంట్ ఫర్ ట్రేడింగ్, అంటే రోజు స్పెక్యులేషన్ చేయాలంటే మేము స్పెక్యులేషన్కి 150% ఆపోజిట్. సో కాబట్టి టిప్స్ అనే మాట ప్రసక్తి లేదు. విచ్ ఇన్వెస్ట్మెంట్ బెట్స్ అంటే ఆ రోజు కొనుక్కోవటం, కనీసం 3 months పట్టినా రిజల్ట్స్ వచ్చేదాకా వెయిట్ చేయడం అట్లా అనమాట. సో కాబట్టి టిప్స్ అనేవి మా దగ్గర నుంచి లేవు, రావు, ఉండవు.
వి సుబ్బారావు, ఎనీ స్పీకర్, ఎవరిని ప్రత్యేకించి అడగడం లేదు. లైక్ ది ఆర్బీఐ అండ్ గవర్నమెంట్ బ్యాంక్స్, వాట్ ఈస్ ది ultimate guarantee of mutual funds? Is there any institution like RBI?
Indian mindset is like that they will invest only when there is guarantee. And that is why I brought up this topic, saying that everything that you have been investing all these years, all these generations, there has been no guarantee. This word guarantee has been fed into your mind, conditioned generation after generation, and that is why you had those 4 things: UTI, LIC, SBI, Post Office. For generation, investment meant putting money in these 4 institutions. And all these 4 institutions, technically speaking, there is no guarantee of these. It is only RBI's guarantee which is valid. No other agency, institution in this economy guarantee is valid or sacrosanct. They will give you money, or they are covered by insurance till the time they are able to earn, and they know that they will be able to earn.
I would like to know something more about Sharia funds, about which the brochure of Vivekam is mentioning about. SEBI is talking about something called whether advisors should give incidental advice, and it is also talking something against unsolicited advice, which is also happening in the marketplace.
The first thing is that unsolicited advice that will never be given unless the people have intention to come ask us for the advice. We do not render. The only thing is, the differential point here is, suppose you come to me and ask for an advice one time, I give you one-time advice. Suppose you come and ask me saying that, sir, I want to be advised whenever it is required. So that's a sustained advice. So what we are capable of doing is either one time, that is, you come, take the service, pay the fees, and then go away. This one part. Other thing is, you will engage me to be advising you whenever the time is ripe, according to my convenience, according to my understanding. Then we send you advices whenever it is required. That explains you the unsolicited advice. We will not advise the client unless he has solicited to give a sustained advice. Now coming to the Sharia, as I said, the product is not supposed to be discussed, but I briefly tell you. The entire discussion is, entire selection process, everything will remain the same. The only difference is, Sharia prohibits some companies from being included in one's portfolio, like be it alcohol, for the advice, for the kind of information of all of you, Sharia is, nothing but Islamic ethical finance. Some Muslim countries or some devout Muslims, they do not want to buy any stock that is dealing in alcohol, tobacco, or money lending, this kind of stuff. There are some excluded lists. So what we do is we signed up with a company in Bombay, which gives us the approved list of Sharia compliant companies. So after the stock selection is made, we remove companies that are not compliant with the Sharia law, and only those stocks would be recommended to the clients who actually wanted a continuous advice. Otherwise, we don't deal with it.
Right, sir. So thank you very much for attending this evening.
So what did you like in this session, Andy? Something that you could take back, or anything that you liked, or anything that you want the viewers to focus on and you think that is helpful for investors in general?
ముగ్గురు స్పీకర్స్ కూడా చాలా బాగా మాట్లాడారండి. మూడు డిఫరెంట్ పర్స్పెక్టివ్స్లో ఫైనాన్స్ గురించి అర్థమయ్యేటట్టు చాలా క్లియర్గా చెప్పారండి. One thing is it has cleared a lot of doubts. Even the question answer session was very wonderful. Lot of small doubts also got cleared, and I got very much more confidence now. Earlier కొంచెం ప్రసాద్ గారు ఎప్పటి నుంచో చెప్తున్నారు మ్యూచువల్ ఫండ్స్లో ఇన్వెస్ట్ చేయమని చెప్పేసి, బట్ ఐ వాజ్ యాక్చువల్లీ ఇన్వెస్టింగ్ మోర్ ఇన్ షేర్స్. సో ఇప్పుడు ఈ సెషన్ విన్న తర్వాత మ్యూచువల్ ఫండ్స్లో ఇమీడియట్గా ఇన్వెస్ట్ చేస్తే ఇట్ ఈస్ నాట్ టూ లేట్ అనిపిస్తుంది. ఇట్ విల్ డెఫినెట్లీ వెరీ గుడ్ రిజల్ట్స్ ఇన్ ద లాంగ్ రన్ అని చెప్పేసి అనిపిస్తుంది.
ఈ ఇన్వెస్టర్ అవేర్నెస్ సమిట్ ద్వారా మీరు కావాల్సింది హ్యావ్ యూ బీన్ ఏబుల్ టు గెట్ త్రూ దిస్ సమిట్ అండి?
నాకు ఎక్కువ ఈక్విటీస్లో, మ్యూచువల్ ఫండ్స్ కన్నా ఈక్విటీస్లో ఇంట్రెస్ట్ ఉంది. అండ్ వివేకం హ్యాస్ ఐ థింక్ అరౌండ్ 4 to 5 ఈక్విటీ ప్రోడక్ట్స్ ఆల్సో. అండ్ రైట్ నౌ ఐఎమ్ గోయింగ్ త్రూ ద డీటెయిల్స్ ఆఫ్ ఈచ్ అండ్ వన్.
Vivekam, a product-driven advisory firm, provides services through features like Snapshot, Spot, Portfolio Scanner, helping clients maximize their results and beat the market. Call our trusted advisors today.